downsizing, take some time and roll through that article, because I think the data will support that the activity is there and will most likely remain there for a while. Because as I mentioned last week and the week before, and probably since the beginning of time, supply and demand is what makes the difference in a market. And right now there's still so much demand, we don't have enough supply, that the interest rates alone aren't going to change that. So question time. I see Dom's got one teed up, so let me throw it over to him and see what we have.
This one's from last week. Jeremy sent it in. The company I work for was just bought by a competitor. I think they're going to keep me, but I'm nervous. I like to refinance and pay off my credit cards and the car. Can I still do it even though I've only worked for the new company for a few weeks?
Hey, that's a great question, Jeremy. And yeah, so here's the thing. You should be okay. I'm going to need a little more information, and I welcome you to call us during the week on the Anytime hotline, but you should be fine. I'd need to know how long you were with the previous company before they were acquired. But there's a process in the loan application called verification of employment, or VOE for short. And in that verification process, we as a lender, or you if you're already working with a lender, will contact your employer to confirm your employment status, your pay rate, but there's also the likelihood of continued employment is disclosed in that verification of employment too. So I say that you're most likely okay, because it's not like you switch careers, and this is completely unrelated. The company was sold, and if I'm understanding your question correctly, you are essentially in the same position. So yeah, I find that not to be a big challenge. I would just need to know how long you were with your current employer. And I commend you on looking at, kind of cashing out, paying down some debt, and, nestling in for this recession. We had a little bit of a boom lately in people considering refinancing, even though we're coming out of an all-time low interest rate environment. As the recession seems to get, more and more teeth, people are thinking it might be a good time to consolidate all their debt into one payment and put themselves and their family in the best position to weather a storm if it comes. So we also saw a little spike of pandemic refis when people were thinking they may lose their job because of vaccine mandates, and where they fell in the belief or the desire or the willingness to get vaccinated. There was a large portion of our society that stood to lose their job because of that. And we saw people doing exactly what you're talking about. They were paying off debt, pulling some cash out, and putting themselves in the best position to start over if they had to. Because, hey, guys, that's the reality. If you lose your job, you're not going to qualify for a mortgage then. If you really think something bad is going to happen, if this recession is going to impact you to that extent, and you're better served to make those moves now and prepare yourself for the storm. You don't go out in the middle of the hurricane and start putting up your shutters. So interesting question. I think you're going to be fine, but I welcome the opportunity to dive a little deeper with you on that. So let me throw it over to Dom and see if we have another one teed up.
Kim just called in asking, this may be a dumb question. I told her there's never a dumb question,
Perfect.
And she's asking, is there a maximum age for a mortgage? I'm 71, but I want a 30-year mortgage because of a low payment. Hey,
Kim, just like Dom said, there is never a dumb question in the mortgage world. And no, there is no maximum age on getting a mortgage. You could be 101 years old and take out a 30-year loan. And age is, you're not allowed to be discriminated against because of your age when being offered a mortgage. And the reality is, if you die with the mortgage and you leave the property to your children, they're going to pay the note off anyway, or they're going to sell the property, and that the note will be satisfied as liquidation of the estate. So there's not any risk on the lender's side of things. They're looking at your credit, your ability to repay, and then the value of the asset. So your age is not a qualifying criteria. So not a dumb question. And you would be surprised how many older people in our that we're seeing daily in our practice, because either in the reverse mortgage space that we talk about all the time, or they're doing refinancing and pulling some cash out for whatever reason, but they're taking advantage of all of this newfound equity to set themselves up for the next chapter. Maybe there's an investment opportunity. Maybe they're buying a rental property. I'm not sure, but we're seeing more and more of it. So that is not at all a dumb question. So speaking of questions, let me throw it over to Dom for another one.
Frank sent this email in. I'm commission only and get a 1099. My CPA is amazing and writes off everything he can, so my tax returns don't show much income. Can I use my bank statement option you talk about even though I'm technically not self-employed?
Hey, Frank, that is a good question. And it sounds like your CPA and my CPA are friends, or they may be the same guy. So great question. And yes, you can use the bank statement program, even though you're not self-employed. Actually, a W-2 wage earner can even use that program if there were circumstances where maybe you had a side hustle that was cash deposits. I mean, we've actually had that circumstance where someone was, breeding exotic reptiles, and they were selling the reptiles for cash, and we used their bank statement income. But to answer your question, yes, you don't have to be quote unquote self-employed. There's also a 1099 only program that doesn't even involve bank statements. We're just looking at your 1099 income. And then lastly, I would encourage you to at least give your mortgage broker, or us, if you're not working with anybody, a look at your application, because there are a lot of write-offs we can add back in, because we know that they're just strategies to reduce taxes and depreciation. There are things like that can be written back in to your gross income. So to answer your question, bank statements will work, but I'd love a shot at getting you a conventional loan first. But you hear the music, that means we're rolling into another break, and we'll be right back with you in 2 very short minutes. Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back, and you heard Mr. Announcer, 561-291-8569. We'll get your number, or we'll get your question on the air right now. That's the number that you need to call or text your questions to, 561-291-8569, or visit the website, www.mr.mortgage. That's mr.mortgagenever.com, or check out the Facebook page. Just go to Facebook and type in The Mr. Mortgage Show, and you'll find us there. So I see during the break that we've got some questions stacked up, so I'm going to try to motor through a few of them, and let me throw it right over to Dom and see what we have.
We just got another email from Dolores. Dolores was asking, we've used more of our savings on medical bills than we expected. I'm very concerned about the future, especially with inflation. We've cut back everywhere we can, but I'm not sure it's enough. Can you explain the reverse mortgage you talk about?
Hey, Dolores, I'm not going to skip through this one quickly because this is super important. But before I get started, I would love, love, love the opportunity to talk with you about this offline because I really feel like this is a huge decision for a lot of people, and it really, it deserves the attention that it needs to make you fully comfortable with it and to see if it's even right for you. I mean, I talked to a wonderful lady a couple weeks ago as a direct result of the show, and the reverse mortgage didn't make sense for her. And it was a fantastic conversation, and she's a super neat lady. But right now where she is in her life, it wasn't the right move. So I'd like to take that same time with you if you're interested. But let me give you an overview of the reverse mortgage. So, and I guess I can use an example of one that we just got wrapped up this week. This particular couple, it was very similar based on your question. I'm assuming the similarities because there were some health concerns for the husband, and they used up a lot of their savings on some uninsured expenses. And they're concerned like everybody else. I mean, gas is, creeping up to near $5 a gallon, and they're feeling the pinch. So the reverse mortgage, what it did for them was allow them to pay off their current mortgage, and they were making a monthly payment of, I think it was around $1,600 a month, principal, interest, taxes, and insurance each month, and that was coming out of their retirement income and their Social Security, and it was becoming a pinch with all of the additional expenses. And as you mentioned in your question, that you spent a little more of your savings than you wanted to, they did the same thing. So what the reverse mortgage allowed them to do is pay that first mortgage off, so they no longer have that payment. And at closing, and we didn't close it yet, we just got it wrapped up this week, it'll close next week, they're going to get access to some of the funds immediately. And I believe they're going to take around $20,000 at closing. And then after the first year, so the beginning of month 13, they'll have access to a credit line that they can draw against as long as that balance remains positive, the credit line balance. So it pays off the mortgage. There's no more mortgage payment at all, ever again. They do have to pay their taxes and their insurance, and there are some minimum insurance requirements because there is still a mortgage on the property. It's just a reverse mortgage. They're getting a lump sum just after closing, and then access to the credit line for the remainder of their lives as long as they don't spend all of the credit line. Now, they can make payments against that credit line later and have it available again if they need it. But the reverse mortgage is designed to take the pressure of the monthly expenses off your plate and allow you to access your equity in the form of income. And it could be a monthly payment that you receive from the reverse mortgage, or you can do as this couple's doing, where they're taking a chunk just after closing, and then they have access to the credit line from that point forward. So a lot of the common questions are, what happens to the property when we pass away? Your children or whoever you leave the property to inherit it, and then they just have to satisfy the mortgage. Just like I think it was a question or two ago, an older woman asked if she got a mortgage, what would happen? And it's the same thing. There's just a lien on the property. There's a mortgage lien, and your heirs will have to satisfy that. And one of the cool things is it doesn't matter which one of you goes first. The other surviving spouse can remain in the property until they pass away as well. So it's ideal if you're in the home you want to remain in, you want to age in place, and you have no short-term aspirations of going anywhere. If you do change your mind and you want to sell or go into an assisted living facility or a 55 neighborhood, you can do that. There's no prepayment penalty. There's no restrictions on selling the property. So it's an amazing loan program. It's not for everybody. It truly isn't. As I mentioned, the woman that I spoke with a couple weeks ago. But if it's right for you, it can certainly be life-changing. So I hope that helps. I would really welcome the opportunity to dive deeper with you off the air regarding this, because as I mentioned, it really requires a lot of attention. There's a ton of questions that'll come up during conversation. So if you're interested in that conversation, just give us a call, 561-291-8569. That's the Anytime hotline. It rings right here, right now when Dom and I are in the studio. but it also pushes to my office during the week. So hopefully that helps, and I'm happy to give you any advice, suggestions, or guidance that you're interested in. So anyway, let me throw it over to Dom and see if we have another question teed up.
Jeffrey sent in this question. He's asking, I think